All right. Louis Porcelino, man over market, 824. Could this be another Black Monday? We talked about Black Monday. I actually traded in Black Monday back in 1987 when the market lost 50% of its value in basically 2 days. But anyway, all right. So just I'm not gonna push the panic button. What I'm going to tell you today is that you have to understand that these moves have to be tempered with the fact that we've printed $20 trillion worth of money just in the United States alone. We got $18 trillion worth of debt. So the way I always, the things that I look at to try to keep me calm, because when I was trading back in the late '90s and we were getting 3,000 point swings and 4,000 point swings. When I first started trading this, if the Dow made a 35 point move, it was big news. Well, valuations of companies have gone up, the printing of money has gone up, and the percentages, you have to take a look at sort of the percentages of the move based on where we've come and really what is the value of money. So I don't really panic. I'm not panicking in this situation because these corrections were long overdue. They're just as exasperated with the fact that we've printed so much money, right? And so values of companies have gone up. Here's the best way to understand this market, right? Take a monopoly game, right? There's one game. We run out of money because only a few people have it. So what you do is you go and steal money from some other monopoly games and you put it in the game. Then there's more money in the game. You go and now you're paying $3,000 for Boardwalk versus $1,000 because there's more money in the game. It's still Boardwalk. Still Boardwalk. So understand that you got to take these things and take them with a grain of salt. Yes, these are great moves and so on, but I don't think they're ready to destroy the U.S. economy and the world economies. And this is also what happens when you have a Fed and world banks that do not let, they've been supporting these markets because they were afraid of exactly what we're getting right now, right? We're getting panic here. So let's take a look at this. So the low from October of last year was way down here. So I've drawn a Fibonacci retracement from here, which was 18, what do we got, 13, 18, 13 even, and 18.15 quarter. All right? And then, so we're looking at a 78% retracement at 1881. All right? 78.6% retracement. And so I start looking at here, and I kept thinking, you know what? I think we're going to get a bounce from here. And the other thing that I look at, okay, we're going to start getting a bounce. But look, this is something where you can't pick a bottom. You're going to let all the numbnuts out there pick the bottoms, right? Because they're going to have to. They're the ones who've created this mess, and I'm going to show you how they created the mess, right? All right. What I did is I went back and I put the profile on for a year, okay? And it's hard to get data on here because usually we only track 180 days. But take a look at here. See the volume, okay? Look how this market from the 1813 area basically went straight up. Look at this. No volume at all. Okay? None. Okay? And it just, and this is when markets, made the lows in October and we just kept going up, kept going. Here's a gap, right? So we got a gap from 1862 to 1865, all right? And you know what? You take a look at the volume. Look at here. In the 1900s, not much time spent there, not much volume, okay? Okay, not till we get back in the 19 quarter area until volume starts picking up, okay? All right, so it's just, you look at these retracements and we're gonna get a spike, but I think they're gonna have to firm up a bottom down here, right? So, it might be, off the top of my head this morning when I woke up, the number 18 between 1850. Well, actually, 1820 to 1850, I thought would be the area, and then I just think that you got to take this with a grain of salt, but you can't get in front of these things. Anthony, did we find out what's going on with circuit breakers today? All right, so we got to find out when the circuit breakers would kick in. If anybody knows, you guys can get it to me on Twitter. All right. So what's going on? I'll tell you. Here's one thing that's a little this is a little calming for me. Okay. All right. If this was really a huge capitulation, you'd see gold. Gold would be up in the 1200s already. All right. Gold is kind of staying in the 1160 above the 1130 area. But if this was really a panic sell-off and it was the end of the world, I think you'd see gold climbing back up there. We haven't put the value areas in here for gold yet. We will do that. We're just trying to ascertain what's going on with the market. So taking a look at this, all right, and I think that gold is not panicking. So I think the market's going to find a bottom today and have some sort of rebound. Okay, so don't get yourself crazy with these markets. These are just this is the effect of having a market that goes down, and with the market going down and valuations are inflated because there's so much friggin' money been printed all around the world. All right, well. You know what? I keep gloating about the oil. I told you so. I think oil is going 28, 30 bucks, 28, 30 bucks. People stop panicking. They've got to put some pain on the big oil companies, and they deserve to get stuck right up their moon because they've been sticking it up our ass all these years. All right. How about over here in Chicago? BP has a problem with the refinery. It breaks down. Oil goes up. They always find a way. That's what happens when the governments allow monopolies or oligopolies. All right? Controlled monopolies. All right? So we end up paying for it. All right. Same thing with bonds. I really think if this was a really, I think bonds are going back to 163. This is putting the nail in the coffin. No rate cut in September. None. You ain't getting it. It's not happening. All right? So I think that, what's that? Is it limit down? The Nasdaq's limit down. Well, figure probably all the books are getting hit. Facebook, huh? They're all getting hit. How about Apple, Luke? Where's it at, baby? Come on. Where's it at? Come on, Lukey. He told me put all you got. Where? Where's it at? 105. Where'd you want to buy it at? 110. I hope you had enough money to cover that margin call. Woohoo! All right. Anyway, look it, guys. Don't panic. Good traders make money when the rest of the world's panic. All right? Just be cool. Follow me on Twitter. We'll start looking for some bottoms here. We'll let the market put the bottom in, then we'll jump on it. All right? All right, same thing. I'm looking at bonds. I think that's the nail in the coffin with bonds, guys. They are not raising rates in September. Maybe we'll see where we're at by. I think we're going to get a robust fourth quarter. I think you're going to get a robust fourth quarter. I think people down here are going to see this as a buying opportunity. All right, and it depends with the 401ks and mutual funds. Are there going to be redemptions, or are people going to say, "Oh man, finally I can," the market's at an area where I want to participate. So, look, I don't think I think the market's going to recover. Because, if this was after the election year, I would be panicking. Big Lou's not panicking, so you don't panic. All right, guys. Everybody stay with us on Twitter. I'll talk to you later.